Let's look at some intraday graphs here. Indiabulls Real Estate, the weakest of the lot. Now, there are some corporate governance issues for Indiabulls Real Estate because 3-4 years ago, they had a huge cash surplus of about 3,500 crore in the balance sheet. That cash is suddenly out of the balance sheet. So there is a bit of an issue there. But the stock which has made a strong comeback is Indiabulls Finance. And Darshan, I guess it's not surprising why Indiabulls Finance has made a comeback because the company has a strong dividend track record.
See, that is right. In fact, if you're seeing, it's the same old story as far as, Veritas reports are concerned. There's just a knee-jerk reaction. But in most cases, in the same day, the counters manage to come in the green, or in the next few days, they are much above what the stock was trading at. So clearly, if you're seeing in today's trade, Indiabulls Financial recovered 13% from the day's low. Again, it has cooled off, but the highest point to the lowest point, 13%. Indiabulls Financial 13%, Indiabulls Real Estate 13%, and Indiabulls Powered actually recovered almost 10%. And we spoke to the management, and they have actually called this entire report bogus of Veritas. Now, what does Veritas say? First of all, they're saying that disclosures by the management are unreal. They are not reliable at all. Apart from that, they're saying that the activities and what they're doing in terms of selling shares to individuals is actually benefiting some particular individuals, not the investors or the retail investors or the HNIs. And the valuations of the company has errors in it. What they also say is that they have actually gone ahead and merged Indiabulls Infra to Indiabulls Power, and that what they have said is that they have taken the value out of the company and given it to the promoters rather than the public. And they have a lot of these things that they have said, but clearly apart from that, they haven't given any kind of target prices in any of the three group companies that like they have done in the earlier case, like with DLF or Reliance Communication or Kingfisher. But they have said that they won't buy into any of the real estate in any of the Indiabulls company unless there is a new management put in charge and the financials are cleaned of all the malafide that the company has done earlier. But clearly, if you look by the trend, most of the counters have strongly recovered from the day's low.
Okay, some flash on the screen. Important flash: tax avoidance rule, which is indirectly GAR. Now that's the comment which is coming from the finance minister himself, has been delayed for wider views. This is an indirect way of saying that GAR has been put on the back burner, if you try and read the color of the commentary. So within a week of taking charge as the new finance minister of the country, there is some clarity which now seems to be emerging on GAR. I don't think the same applies to Vodafone and the government case with Vodafone. Maybe Government of India and Vodafone, they will have to search for an amicable out-of-court settlement. But is this a game-changing event? Well, the answer to that is no, because somehow if you look at how markets have moved, somehow indirectly markets were all betting on a diluted GAR. But these comments from finance minister are important because when the prime minister was the interim finance minister, a committee was formed which would have taken a decision on GAR. But these comments for sure will have implication for markets. And if GAR is history, I'm sure that will delight a lot of global investors who till now always wanted to invest in India, but they were confused in terms of the law of the land. And this actually more than ETF investors, Avan, this will also help some PE investors because those are the guys who invest large sums of money and then they take a 2-3 year India call.
Absolutely, and you can see a bit of a reaction also coming in for the benchmark. So you had the Nifty as well as the Sensex, which saw mild aberration but now seem to have recovered. Let's take it straight to the banking space. M. Narendra, Chairman and Managing Director of Indian Overseas Bank, now joins in from Chennai. Mr. Narendra, to start off with, give us an overview of the profits that you've clocked in this quarter because cash recovery has been higher.
Yeah, the first quarter we were able to have a fairly good gross profit growth. This has come out of, one is on cash recovery. Our cash recovery has been higher than the last quarter of the corresponding quarter of the last year. And also we had a return of account recovery also around 58 crores. That goes directly to the profit. And in spite of making provision for NPA, incremental NPA of around 865 crores, enough adequate provision for even movement of the NPA account, we had increased the counter-cyclical buffer against 50 crores to 75 crores. Then we have made provision towards income tax against last year 92 crores, plus standard accounts and restructure account we have made additional 39 crores. With the 613 crores also, the net profit has moved from 233 crores is the 13.39. So one is on, we were able to have a liability management wherein the cost of deposit from the March quarter level, it has moved around 0.2%, 0.2% less. So the cost of deposit is 7.32, the cost of funds. And in spite of the base rate reduction, the reduction in the lending or average yield on credit is fairly, it is at the maintained level, but the yield on investment has been maintained at 7.30. So all that has given the net interest income also a fairly growth compared to the last quarter of the last, that's June 2011. So these are the drivers. One is liability management, a proper control on our expenditure, and also recovery in return of account and other accounts.
Mr. Narendra, the fact that the Reserve Bank of India has slashed the minimum SLR requirement by 100 bips, how will that affect your profitability for coming quarters?
One is that currently around 8% of, means around 27% plus is the SLR position of the bank. And that against the current requirement, the RBI has yesterday 1% reduction means 23%. So around 1,800 crores of additional borrowing we can do with the RBI. That gives me an opportunity of deploying these funds in other alternative productive sectors. So we are looking that as we go forward, if we are able to have the proper utilization of this additional facility given by the Reserve Bank, we may look at some of the productive sectors where already our rate of interest is competitive. But since we have a plan to go more as a retail credit growth, particularly on housing and vehicle loan, plus micro and small account, we may get some benefit of interest reduction in order to enlarge customer to be brought to our fold. So we will be discussing this in ALCO, and we may look at some interest reduction, even though current base rate per se cannot be reduced because there are large deposits which are accepted at a higher rate. So as you go forward, if it is maturing and the incremental deposits are coming at a lower rate, then you get some more cushion to look at the base rate reduction. So if the deposit rate comes down on account of the lower growth in the requirement of credit itself, the deposit rate has to get moderated. And also the inflation, if the current, some of the steps taken, if the inflation gets lesser, in the sense RBI has increased to 7%. From the 6.5%, that shows that the inflation this year, because of the monsoon and other issues, which is deficit and all, not likely to come down to their comfortable level of core inflation. So, but we hope that if the thing comes down, then there is a chance to reduce the deposit rate further, which will give you a better opportunity to reduce the lending rates.
Let's talk more about your asset quality. Which are the sectors which are showing stress? Has there been any fresh slippages this quarter?
Yeah, of course, there are, this quarter has been around 865 crores, and the last quarter of March around 1010 crores. Compared to that, it is lesser, but corresponding quarter of the last year, this NPA has been higher. However, we have one or two accounts in this which are targeted for upgradation. So we are looking at some of the recent accounts which have a target for upgradation by collecting the critical amount. But as this one, some of the accounts will be in the pipeline, around 2,000 crores in CDR. Beyond that, our restructured category in this quarter also is hardly 750 crores. Out of that, one is a state electricity board. So we find that if we are able to provide available rules, some restructure and from the CDR on a genuine front, there will be limited chance of major accounts coming into the NPA. So we would be able to control the NPA within the last year's level of overall NPA this year. At the same time, aim at around 2,000 crores of cash recovery and upgradation, so that the terminal figure of NPA can be managed well. These are our current plan.
Mr. Narendra, appreciate your time and thank you for your insights.